Senior Executive Director, Marketing and Sales, Maruti Suzuki India is on the show right now to talk about how their monthly dispatches were for the month of November. Shashank, great to have you on ETNOW. Thank you so much for taking the time out. I'm just going through your November performance and it sort of lagged what the market was anticipating, or for that matter, what you've done for the month of October. What's the reason behind that? Is it demand or is it supply which is the core issue?
So right now, I think on the demand parameters, thankfully, it seems to be strong. We have good flows of bookings and inquiries, and largely it's the supply side which has been the issue. In fact, it has been the issue since August, if you recall, largely because of the semiconductor shortages. And that's the reason why of course, it's affecting overall all the OEMs. So if you look at the wholesale numbers for this month, industry is roughly about 246,000, which is a dip of about 14% over last year, the same month.
But is there any visibility, Shashank, like we were chatting about in the break? Who would have thought that a 3,000 rupee chip could create so much chaos across industries and, especially autos? Is there any, resolution in sight? Are things at least beginning to get normal or not quite?
Yeah, so things are getting a little better because if you recall, when we had informed the stock exchange also, production in September was about 40% of the planned production. October was about 60%. And November was roughly about 85%. So I think things are getting better. The only thing is that when it will become normalized, it's a little difficult to answer because it's not just limited to one vendor or one company. Not just Maruti Suzuki, but all OEMs in India, and not just India, all OEMs across the globe. And the supply situation, supply chain is in this case involved globally. So it's a very difficult to pinpoint exactly when things will become normal. But that much I can say that it's getting better over the last few months.
Sure. But if I were to really push you in a corner, just going by your commentary itself, wherein you're indicating that 80 to 85% of normal production levels is what you foresee for December. So it seems like at least you are on the right track.
Absolutely. So that's what I'm saying, that the track seems to be right. However, when we will cross that tape is the question. So we are picking up pace. Hopefully we'll cross the tape soon, but little uncertain because of the circumstances that I mentioned a little while back.
Sure. What can you tell me about demand then? Because, supply clearly is a gray area right now because of the component shortage. But is demand intact? Or do you think there will come a point where because of the supply constraint and the long wait, that's going to impact demand as well?
Yes, so demand fortunately is strong. So if you compare with the previous year, the inquiry levels is actually higher. In that sense, it seems very positive. The rural demand also is pretty strong, going by the inquiries and the bookings that we have had. But hopefully this will continue. But you are right, you did flag the right red flag, which is the fact that if the waiting periods increase substantially, it might be an issue with consumers, and consumers might just decide to postpone their purchases. Or go in for used cars or some other mode of transportation. So at the moment, for example, Maruti Suzuki has close to 250,000 bookings pending, which is a reflection, which is much more than what it is there normally. And that is a reflection of the customers waiting for their vehicles to be delivered after they have made the bookings. So yes, if the period of waiting increases substantially, we could get into that danger of affecting the demand pattern itself. You are right.
Yeah, I was just donning a consumer's hat here. So what happens now? Do you also push back your new launches, or is there a ready pipeline?
So we just launched the Celerio, if you recall, a few weeks ago, a couple of weeks back. The response has been extremely encouraging. We would continue to with our plan to launch vehicles as planned, and hopefully this situation will be behind us in a few months' time. Hopefully.
Right. The other thing that I wanted to understand, Shashank, also is because commodity costs as well have risen up, right? So it's
Yeah,
a
yeah.
bit of a tightrope walk for you guys with the semiconductor chip shortage on one end, commodity costs going up on the other, and fuel prices for the consumer. So a bit of a miscreant trio here. Do you then bring down your costs consciously to try and keep the demand intact? What's the strategy?
Yeah. So again, you raised a very important point. The commodity prices, which affect the material costs, is a major cost for in the OEM's cost structure. In fact, it's about 75-77% of the cost structure is for any auto OEM is material cost. So commodity prices do affect our profits substantially. And if you recall, the prices of steel, copper, aluminium, the precious metals which are used for the catalyzers for BS6 vehicles, they have gone up substantially, much more than the price increases that we have seen so far. And initially, in fact, they started going up last year itself. Last year, we didn't increase the price because we were very conscious of not compromising with the bounce back in demand. As market leaders, we were very conscious of the fact that it's our responsibility to see that the demand is not compromised, and the demand did come back. But we were hoping that the commodities will soften in terms of prices, but they haven't. And they did not, and we had to take price hikes in January, in April, and also in September. Yeah, but the price hikes to Maruti Suzuki is the last resort. And we obviously look at Kaizen for reducing cost, improve productivity, improve efficiencies, etc., so that the consumer is not unnecessarily affected. But I'm afraid the increases which we have taken so far do not compensate for the huge increase in the costs because of the commodity price increases. So yes, we are watching the situation very carefully, and in a few days' time, we will take the decision whether we need to go ahead with any sort of hikes in prices.
So, as a strategy, and I'm sure you guys must have sat around the boardroom many a times to try and really grapple with the situation at hand. What is it that you're going to choose? Is it going to be margins over volumes, or vice versa? Because something will get dampened because things are really not moving, be it commodity costs or the component shortage.
Yeah, so we in our discussions we try to find that sweet spot. We keep saying that we are walking that really fine line between top line and bottom line. So we can't really look at the top line alone, which is the revenues, which is the sales volume, and ignore the bottom line, or look only at the bottom line and ignore the top line. Somewhere in between lies the sweet line, the tightrope on which we are to walk. But to discover that line, the tight rope line, is a little bit difficult. So you have to make some estimates of the demand patterns of the future commodity prices and our cost structure, and take decisions accordingly. And that's what we are trying to figure out at the moment. What is going to be, and this is always the difficult part, where you have the pressures of bottom line, but then there are pressures of top line as well. So we are walking the tightrope, as I said, and we will just decide when to which way to shift in a few days' time.
Seems like a tough call there, but Shashank, great to have you on ET now, and I'm sure we'll chat again soon.
Yes, thank you so much. Thanks.
Thanks. Bye.